Is the U.S. consumer in a good place?
Good place. They're in an okay place. And the consumer has definitely started to struggle some relative to where they were. And I don't think that's surprising. You know, when we were looking at 3.5% interest or 3.5% unemployment, and you're only looking at 1.7 continuing claims, they were in a good place. Right now it's 4.5 and it's over 1.8, and we're heading toward, you know, maybe 5%, 1.9. If that's the case, the consumers got to slow some. And we're seeing that. And Walmart is a fabulous retailer. They're the greatest retailer in the world. They gained market share. They gained it with customers they shouldn't have gained it with, the upper end, because they've been working really hard at that. And they stopped out trade down. So they won the game. They gained share, and they look great. But the consumer, even inside of Walmart, is still being more choiceful. They're still trading down a little bit into private label. They're doing all the things they always do before they slow spending more. So the Fed needs to move now because they won the game against inflation. Inflation in goods is zero. And the consumer's saying, hey, I'm hurting here. You know, it's time. We need to move. And they just haven't moved the bar yet. But if they go in September, maybe they really get a soft landing. Otherwise, we get a consumer-led recession.
Jan, it makes sense. And Bryan, speaking of that, we got two major retailers. And I'm not going to say that they're on the opposite ends of the spectrum. They're both very big. It's Home Depot and Walmart. But the commentary about the consumer really kind of resonated differently. With Walmart, no fraying, kind of things are okay. Things are okay for the consumer. Home Depot expects a slowdown in spending for the second half of the year. How do you reconcile two barometers of the U.S. consumer going in different directions?
And the third was last month, which was Amazon as well, which had sort of the Goldilocks in the middle view of the consumer between Home Depot and Amazon. I guess the way you look at this is that Walmart's sort of like America's income statement, and Home Depot's like America's balance sheet. And I think if you look at America's income statement at the moment, with to Jan's point, with the CPI being relatively level, that puts that shopper that's just trying to make ends meet on a month-over-month basis, that shopper is now getting back to a place where they're doing reasonably well. At the same time, I think you want to be cautious, as Jim Cramer mentioned, to use Walmart as a proxy for the U.S., partially because of Walmart's quality of operation, but also because there's real pressure on the consumer, if you look at the CPI, in one specific area, which is shelter costs. And those are largely renters who are largely in more urban areas where rents are under pressure. Walmart, because of its geography, is kind of insulated from that. Even their higher income shoppers aren't necessarily urban shoppers. The retailer you'd want to watch for something like that is Target, that has a younger and more urban guest, and whose guest might be under more cost pressure. But certainly, yes, I think to echo Jan's sentiment, the Home Depot shopper is really feeling the pinch from interest rates. They talked about this a lot. And with the over $1,000 sort of discretionary project pressure that Home Depot's seeing, the balance sheet's under pressure, but the income statement appears to be okay.
Jan, this is very much a story this earnings season about execution, the microeconomic story about how companies are navigating this. Some are doing it better on a relative basis than others. I wonder, in your opinion, which retailers are doing it well enough where you can see investors piling into and bidding up their shares over the course of this, I guess, the rest of the year, because we got back to school and then we've got, holiday shopping season coming up.
Okay, let's assume the Fed's going to start moving here in September, and they're going to give us 25, 25, 25, 25, 25 till they get down 150 basis points. You got to still love Walmart, right? They're going to win. Costco, Kramer mentioned, they're going to win. They're the second best retailer in the world. Home Depot, despite what we saw, is going to win. And Dick's Sporting Goods, who's put a lot of technology in and a lot of newness, is going to win. So big thrill there, right? But we're also really happy with what might happen with discretionary retailers through this back half, as long as we don't get the cracks in the consumer to be worse and we do start seeing the Fed move. So then you're liking Ralph Lauren, you can like Nike, you can like Lulu and PVH and Tapestry, and you can like Levi's, and you can like the little guys like Boot Barn and Tractor Supply and Casey's General Store, because these guys all have niches. They're all winning their little game. And as long as the discretionary consumer stays with us here and is able to spend, those companies are going to win. My concern is that we start seeing worse cracks in the consumer. Right now, yeah, we're seeing little problems with debt. We're seeing 55 plus bankruptcies in retailing, the most we've seen in 13 years, but it's the littler guys who can't compete because these big guys are spending so much on technology. But the ones I just named can all win. And then what's going to happen? If interest rates going down, some of these deals are going to get done. A Macy's deal could get done, a Nordstrom's deal could get done, and even a Kohl's deal could get done. You might want to think about that if you're an investor in the retail side too.
Okay, Bryan, we're going to give you the last word here. Are there other retailers that you think stand out to you as being good possibilities for investors?
I think Target's going to be interesting, given that they're kind of in the middle of a number of these things. But I do think with Target, I think you might find that some of their basic needs shoppers are under a little bit more pressure from a cost point of view. But remember that July is basically turned into a shopping holiday in the US because of Prime Day. I think it's one of the reasons why the retail sales numbers were so strong in July. Amazon's quarter ended in June, so they didn't report on that, whereas Walmart and Target do, as does Best Buy. So I think you might see all those retailers have strong general merchandise or discretionary spend. The other two, I think, are indicative of where America is as well, and they're small, so they're smaller, but they're both doing quite well in different ends of the market. And that's Sprouts and Grocery Outlet, both of whom had extraordinarily good quarters. And I think continue to show that if you've got a well-defined positioning against a specific part of Americans and you meet their needs better than anybody else, you can win, and almost irrespective of what that segment is. I'm probably less bullish on the apparel sector writ large. I still don't know exactly. I would find it risky to try to take a bet on which one of those companies is going to win. I don't think they all will. So, and I think right now you just have to. That's one where I think, to the point you made earlier, execution is key. Who's delivering on their promise to the consumer the best?